G'day, this is Tom the Bearded Broker. I'm going to talk to you today about fixed rate loans. What is a fixed rate loan? Well, essentially this is a credit contract you enter into, which for the term of your loan, the interest rates will remain the same. So this has the impact of making your dollar repayments the same as well. So this is very beneficial for a couple of reasons. The first obviously being if your cash flow is erratic or you want to track and forecast exactly what you're going to be spending, fixed rate loans obviously will tell you exactly what you're going to be spending for the next 2 to 3 years, whatever the term of your loan is. And obviously you can lock in 1, 2, 3, I don't know if there's many fours out there, 5s for sure, 10s. But at the moment, 2 to 3 years is pretty much the sweet spot where people are locking in their fixed rate loans. And 2 or 3 months ago, towards the end of 2016, that was when the fixed rates were really, really low. They're right at the bottom, and since then they've started to tick up a little bit. And I made a comment a week or two before they started coming up, and I said to everyone, talk to your broker, get in there and lock it in. And if you did, congratulations, you probably got the sweet spot, the historical low. Now, why would you fix in your rate? Well, we've discussed that in terms of cash flow. So what impact is this going to have on your actual ability to repay the loan? Well, generally speaking, with a fixed rate loan, you can't repay too much above the principal. So you might say over your 2-year period, the bank is planning on you paying, let's say $20,000 off your home loan. You can't put $50,000 on top of that because the bank has factored in a certain amount of profit they're going to make on the interest they're charging you on the remaining principal. So if you pay down too much of your home loan, then they're not going to be able to charge interest on that amount that you've paid down. They can only charge it on the lower amount. So they're going to lose out on a little bit of profit. So as a consequence, for your certainty, you can only repay a certain amount above that minimum principal. And also another thing is you generally can't have an offset account. With some you can. Typically I would see 30 to 40% offsets, or there are 1 or 2 products with 100% offsets, but they're not very popular. So normally when you have a fixed rate loan, you don't have an offset account. And this is because, same with repaying too much of the principal, the bank doesn't know what you're going to put into the offset, sorry. So if you put too much cash in there, it'll offset the entirety of the interest they should be charging you for your home loan, and as a consequence, they won't receive their profit for that period. So if you bail out of a fixed rate term too early, then there might be a large charge because the bank has factored in this profit and you're leaving them without the profit, so they need to basically claw back that profit. And if you exit towards the end of the fixed term though, there probably won't be a very large charge, because if you've got like a week or 2 left, there's not that much profit left in it for the bank, so it's not that big a deal. Until next time, if you have any queries, obviously put them below or send me an email or text. Until next time, I'm Tom the Bearded Broker.